Apple is coming off a great 3 month stretch in which it saw $90 in growth in the final 3 months of 2019. Now the question is, will that success carry over into 2020? In the fourth quarter of Apple's year, we saw $64 billion in revenue, with the projection coming into 2020 quarter one of 85.5 billion to 89.5 billion. That would be a growth of 34%, which is not out of line of what we've seen in the past. Typically, Apple has very strong first quarters as they include the final 2 or so months of the year prior, and it definitely makes their first quarters look really good. Now just think about this for a second. What happens in the last 2 months of a year? Well, Black Friday and general Christmas shopping and other holiday shopping. And also, it's a good time of year for iPhone, which has usually been on the market for about a month or so by the time November rolls around. So it's not surprising that Apple always has a good first quarter, and it's by far their best quarter of the year every year. So when we see 34% growth of revenue, that is not as crazy as it looks because it's going to return down to earth in the second quarter. Last year we saw 34% growth from the end of 2018 to the beginning of 2019, and the year prior from 2017 to 2018 we saw over 60% growth in those 2 quarters. So we need to look back at 2019 and really see why Apple grew so much. When you really start digging into the numbers, the 10Ks and all that, it's a little bit surprising that Apple had such a great finish of the year. Their revenue overall was down on the year, and iPhone sales were down 14% from the year prior. Now, iPhone is obviously a large part of their business. It is the largest part of their business. But unlike the years prior where it was making up revenue of about 62 to 63% of Apple's total revenue. Now, this past year they got it down to 54%. And they are getting more revenue now from wearables, AirPods and Apple Watches. You walk around in public, in school or the grocery store, you're going to see AirPods and Apple Watches on multiple people. That's just how it is. And that has become a huge part of their business. It grew 41% this past year, and over the last 2 years it's gone up 91%. Now, this is not going to combat Apple's loss of iPhone sales alone, because as we saw, they still were down in revenue from the year prior, despite this rapid growth from wearables. And even with services up, they still could not make that revenue up. So, why did Apple grow? It's still a question that I cannot answer. Besides the fact that the market was just so hot and Apple kind of went along with it. Now, looking forward, we need to assess whether Apple is really worth the $300 stock price and whether it'll be worth $300 within the next few months. So we have the iPhone sales dipping, and we have growth in other areas, but there's still not enough to make up for Apple sales dipping, or from iPhone sales dipping. So where is Apple going to make up this revenue? Heading into the first quarter of 2020, there are two things that are new for Apple. We have Apple TV Plus, and we have the Apple Card. Now, we don't know how much those are making yet because Apple obviously hasn't had a quarterly report. And when that report happens and they make the 85.5 to 89.5 billion that they're forecasting, we will see how much is impacted on their business from those two products. But again, is it going to make up for the lack of iPhone sales? And if it can't, then we're going to see some fall from Apple. It may not happen immediately because the numbers are going to look big right away. But once you really look in and see where iPhone sales are at and all that, other sales, we're going to really see where Apple's at and whether it's worth $300. Now, from a technical analysis standpoint, just looking at charts and trends, there are some concerning things with Apple. So first of all, it's PE ratio, price to earnings ratio. This is pretty self-explanatory. It's the price of the stock compared to the earnings, and there's a ratio, and you typically want it to be between 5 and 15. Usually suggests that the stock is not too hot. It's not, it's not kind of moving too quickly, which can be okay if they're rapidly growing in revenue, or usually for younger, smaller companies, a high PE is fine. But for Apple, being worth over $1 trillion and having a steady source of income and revenue, we would like to see that at a lower number. And at the end of 2019, we saw that get up to 25, which is at the highest it's been in 10 years. And that is definitely concerning and shows that this is maybe moving a little bit too quickly, moving too hot. And then you look at RSI, Relative Strength Index, and that basically RSI charts how over or underbought a stock is. And you want that number to be between 30 and 70. And as of today, Monday, January 6th, that number was at 87, which is the highest we've seen, as you can see on the chart on your screen. This suggests a pullback is coming. And the question is, when is this pullback coming? That's something I can't answer. We have the first quarter earnings coming at the end of this month in January. Maybe early spring. But it's hard to expect Apple to continue to run up, even if the market continues to be hot. Because Apple itself is just a little bit too hot, and they haven't really made the sales in certain areas to justify it. So before you get too excited and throw all your money at Apple with it running up to the amount it has run up lately, just do your homework, dig in a little bit, and you'll see that Apple has gotten just a little bit too hot. And some point in 2020, we're going to see a pullback.